What's up everyone, it's Scotty with Money Investing. In this video we are going to be talking about inflation. So CPI numbers come out first thing tomorrow morning at 8:30 a.m. Eastern. I will be live to cover those numbers. Yes, that is correct. So tomorrow, unfortunately, my family is going back to India. So they've had the best time. They had the best vacation. I tried to provide them the best thing possible when it comes to food and all experiences and whatnot. So we had just a phenomenal time, and I really do appreciate your guys' patience in while we were, obviously having this family vacation. Because, like I said, over the last 2.5 years, I've never really taken a really true break. And even during these times, I'm just, constantly, obviously, working and putting out videos and content for you guys because I love you guys and I love our community and I want to keep doing what I do, forever. So that's why, obviously, we had this time with my family a little bit, but then also, producing videos and keeping the content going. But starting tomorrow, we're back to our schedule. We're back to the live streams. We're back to our regular market update videos, members only private videos, and of course, a lot of trades that need to be made with investing alerts, trading alerts, options alerts. Everything's going to be included. Of course, if you do join our money investing community, links are going to be down below. We'd be more than happy to have you on board. So let's talk about inflation. Tomorrow, 8:30 a.m. Eastern, we've got bright and early the July CPI numbers coming out. And this right here is what Tom Lee pretty much mentioned. July CPI is going to be revelatory, and business consensus core plus 0.22% month over month. 1/3 of the economists see over 0.3%, and Cleveland Fed sees over 0.4%. So if we see a 0.3% or higher print month over month, he says equals bad. If we see it less than 0.2% month over month, equals good. And I think I do agree very much. And again, if you take a look at the consensus estimates right now, consensus month over month is 0.2%. So anything below that, I think is going to be good news. Anything above that is obviously not going to be great news. And year over year, we're expected to tick higher to 3.3. And core CPI expected to increase 0.2% month over month and year over year at 4.8%, pretty much remaining steady at where we're at. This right here is going to be again from Cleveland Fed inflation year over year, and I promise I'm not drunk. July here CPI year over year 3.42%, core sitting at a little under 5. They've always overestimated that number a little bit higher, and the number obviously has never been hit because of that overestimate here. And of course, this right here is going to be that month over month 0.41% for CPI, and of course core sitting at 0.4% for July as well. Now this right here are going to be some of the different banks on Wall Street. So Bank of America, Barclays, Citigroup, Goldman, all those different banks, and 0.2%, 0.25, 0.27, 0.16, 0.2. Those are the different numbers they are expecting month over month. But headline, they all are expecting for us to increase, for us to go from 3% to 3.1, 3.2, 3.3, 3.4. All these different numbers is what all these banks on Wall Street are also expecting. And core CPI, they're expecting at least 0.1%, if not more, 0.15, 0.19, 0.2, 0.3. And of course, they're expecting 4.7 minimum 4.7, if not 4.8 for core. So if we do see best case scenario 4.7%, that's going to be a little bit of a decrease on a of course month over month basis from where we were last month to where we are now. But of course, if we stay steady at 4.8%, then we're going to pretty much be steady in line with the consensus. But of course, if we see a 4.9 or anything higher, that's obviously not going to be great news for the Fed, for the market, because that's once again going to reignite all those fears with respect to interest rates and the possibility that we do see some interest rate hikes in the future. Now, going over to the markets today. Now, last week was red, right? So we were down. Last week, the S&P 500 and the NASDAQ, we were lower. And this week also, we have not really done too well. We have seen a couple of red days from the market here. I'll just wait a couple more seconds before this thing loads, because the internet definitely has been giving me some problems. But nonetheless, we do have seen a little bit of a pullback on the S&P, on the NASDAQ. Right now, we're sitting at just under 4,500, down another 30 basis points. And last week, like I said, we were down over 2.2%. And right now, we're just really consolidating sideways. At the moment, on the week, we're barely up about 17 basis points. And for example, the NASDAQ here also selling off last week, had a pretty brutal week. We did see a little bit of profit taking. We did see the treasury yields go higher, thereby putting some more pressure, downward pressure on equities And of course, not to mention, we do still have a lot of new issuances, the Federal Reserve's balance sheet roll-off, that's adding to even more pressure, downside pressure on prices, bond prices, both equity prices and bond prices, and of course, upward pressure on the yields as well. And we're starting to see a little bit of a breakdown here. And of course, the NASDAQ is down over 87 basis points, almost 1% on the week so far. So tomorrow's inflation print is really what's going to dictate where we go from here. Right now, the market's pricing in no more hikes, right? So we're expecting higher for longer, expected to stay here where we're at with interest rates at 525 to 500 basis points up until March, and that's when we're going to start to see some cuts. At least that's what the market's pricing in, but the Federal Reserve has been very clear in their messaging, pretty much telling us that they're not looking forward to cutting rates. Rate cuts are not in their base case, and they're pretty much looking at keeping rates higher for longer, and of course being very, very data dependent. With all the incoming data, they're going to be looking to potentially raise rates even further if inflation comes in hot. Now, a couple things to note here. Number one, rents continue to be a wild card. We don't know where rents are going to go, right? Because there's spot rents and there's the rents that we are actually seeing in this consumer price index report, the CPI. Jeremy Siegel and a lot of other people who've been very vocal with the spot rents are saying and are suggesting that if you actually use the current spot rent, inflation is below 2%. In fact, rents are in deflation, which obviously is not the case when we actually look at the CPI numbers. That, again, is owner's equivalent rent, right? So it's a very weird way of calculating it. You pretty much call someone up and ask them, like, what do you think your place would rent for? And of course, that data can be very misleading. It can be very inaccurate. And at the same time, also rents are slowly and steadily, from my experience and from everybody that I've spoken to, they are raising rents, right? They're doing a lot of forced appreciation. They're looking to raise rents. So again, it's a little bit of a wild card. There's a lot of mixed information when it comes to rents and shelter prices, and that controls pretty much over a third of inflation. So that's a pretty big deal. Number two, we know for sure that July energy prices were higher. We were up over 16% for crude oil. That is another not so great news. And gas prices, retail gas. In fact, if you go over to AAA gas prices right now, let's just take a quick look at what they were like in the month of July. So if you go over here, let's just do that. AAA gas prices over here. We click on this link and it'll take us to what that retail gas was, or the average, the national average was of course, as of today. So as of August 9th, we're looking at $3.82. That's the national average, of course. Some parts of, the West Coast, like for example, Oregon, $4.67, California over $5, Washington over $5, and of course we've got Texas, Oklahoma, and Kansas, Arkansas, like all Louisiana, all these states, a little bit under $3.50 per gallon. Pennsylvania just under $4, New York just under $4, Massachusetts is going to be a little bit under $3.80. Of course, New Hampshire $3.60, but let's just take a look at 1 month ago. We were at $3.53, right? So if you take a look at where we were 1 month ago versus where we are now, $3.82, we have seen a little bit of an increase, right? So if you do the math, 382 divided by 353, we're looking at least an 8.2% increase month over month for gas prices. And that is specifically what I've mentioned before in my previous videos, that energy was higher in the month of July, and I feel like nobody's been talking about it. So very, very important number is energy. Month over month, we did see an increase, so that's going to be a bit of a problem, at least in my opinion. That's why the consensus expectations are for us to see a little bit of a tick higher in headline and core. Core steady, stable at those levels, and of course headline to be a little bit higher. And finally, we come to food prices. Again, with the export bans over in India and some other agriculture items also increasing because of the demand supply imbalance, it's possible that we do see a bit of an increase in those prices month over month for food as well. So bottom line is that if, of course, numbers come in worse than what the expectations are, be ready, brace yourself for a potential sell-off, an accelerated sell-off for the market. But of course, if we come in line or somewhat better, which I find it really difficult to foresee given what I've already mentioned to you guys with energy, rents, and food, then of course it's possible the market starts to recover a little bit back higher and kind of regain some of that momentum. But unfortunately, from what I can tell, from what I can see right now, it's a little bit unlikely for that to happen. Just saying and just putting it out there. So be cautious, obviously. Proper risk management is key. Don't gamble prior to the numbers coming out. Definitely be reactive and trade depending on how the markets move after the event after the inflation numbers are released. But as always, if you enjoyed this video, found it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. We'd love to have you on board. Again, you get access to all the buy and sell alerts, options alerts, trade ideas. Everything's going to be included. As always, happy investing. I'll see you all in the next video.